Here's everything you need to know about the market session correlation report on edgeful.com. So here we're looking at YM in the last 6 months. And what this report looks at is how often, if the London session closes green, does the New York session also close green? So you can actually compare London and New York, Asia and London, and then Asia and New York. So let me show you exactly what this means. And I will go to today. Actually, this is a pretty decent example. One thing is that obviously this market sessions indicator that plots out the Asian, London, and New York sessions will be very helpful to you in this example. If you go to the settings and you go to style, you go to this lines, it'll plot out these lines that go from the open to the close of the sessions. Now, I'm going to hide the Asian range for a second. And what I want to show you is, what I first want to show you is make sure that you have your customizations set properly. And then now we're looking at the open to the close customization. So what you can see is in the last 6 months on YM, for every time the London session closed green from the open to the close, almost 70% of the time, New York has followed it. And that's what we're looking at here. From the open, right over here, from the open to the close of the session, obviously this is green, so I'll make it green. From the open to the close of the session, the London session is green. Also, you want to expect New York to follow. So in this case, you have London is green. That gives you a strong bias for the New York session. Now, here's an example of London closing red and then New York closing green. That falls into this category, or actually that falls into this category here. London closed red, New York closes green. So this is something that can help you understand what, based on what happened in the London range, what can I expect to happen in New York? And you have to wait, this is really important, you have to wait for the London session to fully close at 11 a.m. Eastern time in order to start to determine your bias in the New York session. Like today, like this day here, you would have assumed, if you had taken this trade earlier in the New York session, starting to build your bias for that New York session, you would have assumed that London is going to close red. And then it rockets up and then your assumption's wrong. So make sure to wait for London to close fully, for then you can have that bias for London to close green or red. So in this case here, London closes green, New York closes green. Now, what's important to note is that you really aren't going to be taking a trade specifically off this only. In this example here, obviously price came down all day. This is an outlier day. There's a bunch of other stats that I can just see off from my eye right now that would make this an outlier day. The initial balance, in this case, even if we just put, it's not important. The opening candle continuation was green. Initial balance probably broke to the top side. It did break to the top side here. There was a lot of things that made this an outlier day in terms of a reversal like this. Here's a better example where price, I think this is actually FOMC. Let's try to ignore that for a second. Okay, here's a pretty good example. London is green. New York is consolidating here. Your bias should be bullish. And specifically, because we're using the open to close customization, you want to expect price to close above this area here. Right over here. Because you want to expect today's close to be higher than it opened. Now, obviously, you're not going to take a trade. You're not just going to hold a trade and just hope that price goes up. You need to have other confluences, but this is a great report for confluence. I know my London session closed green. I want to have that bullish bias. I want to expect some continuation. I want to expect price to close above this area here. So that right over here, this is another example. London green, New York green. London red, New York red. You can see when these two lines, which obviously is extremely frequent, when these two lines follow on this diagonal line specifically, London red, New York red, London green, or London red, New York red. Here's an example again of them deviating. London is red, New York is green. So that is the overview of the open to the close customization. That's this right here. And if you want to look at, I'm going to touch on Asia and London for a second. So what I'm going to do is I'm going to hide actually London so we don't get confused. Just give it a second to load. Okay, here it is. Here is the data. Almost 60% of the time, if Asia was green, London will also close green. Or actually, sorry, it's I meant to hide New York. So you can see they tend to fall in line. So 2 upwards, 2 down, 2 up. Here is a one where they'll deviate. And really the one where it'll deviate more is the Asian range closing red. So this applies to even Asia and New York, which looks like this. And you can see the correlation is not super strong here. But if I go to London and New York and I go to close, this is checking, is price. This is a very good example actually. So this is a great example right over here. So if we go and we look, did London session closing green when you have this customization on is checking, did this London session close above the previous close of the other London session? So now the opening prices are completely irrelevant. You're checking, is today's close green? Is it higher specifically? Is today's close higher than the previous London close? And how does that correlate with this New York to the previous New York? So in this case, you can see that almost 70% of the time when today's London session closes above yesterday's London session, 70% of the time, today's New York session will close above yesterday's New York session. So in this case, this is actually not, this New York session counts as red. This is super important. The reason for that is because we are referencing this closing price here. I'm going to make it red. And you can see that price closed below that. So in this case, we are looking from here to here, and it is very slightly, but definitely red. So if I go to, what day was that? Thursday the 20th. Okay, so you can see here, London closed green. This is now, I'm on this specific day here. London session closed green. We determined that because this London session closed above the previous London session close. Then the New York session obviously closes red because this New York session closes below the previous New York session. So the way to really think about this is you always reference the previous closing price. This calculation measure is mostly because of when people say, and looking at, I'll pull up Tesla right now. When people talk about performance, you can see here, the performance of Tesla, when you see on CNBC, you see on the news or wherever online, you see Tesla's up 12%, 11.93%. That is not from today's opening price. So from today's opening price, it was roughly 8%. But from yesterday's closing price, it is 11 point, whatever it is, I'll actually be more specific here. It is 11.9%. So it accounts for the gaps. And that's why you want, or you don't have to, it actually doesn't matter which one you use, but that is a reason to use the previous close to close calculations. That's the important piece here about why and like what it actually accounts for. But I wanted to cover that. And then there's no sub-reports for this one. But if you have any questions about it, reach out to our support right over here. Click send us a message. We will get your questions answered as soon as possible. Thank you for watching. Please subscribe to the YouTube channel. Appreciate you. Have a good one.